Hello and welcome to all our viewers on CFO Insights. I am Sherry, a financial technology consultant at Hyperbots, and I'm very excited to have Michael VanPatten here with me, who is a seasoned executive with expertise in strategic planning, M&A, and financial optimization, driving business growth through innovative solutions and effective leadership. Thank you so much for joining us today, Michael.
Thank you for having me.
Today, we'll be talking about best practices for GL posting, net versus gross payment values, and discount headings. And to get us started, Michael, what is the key difference between posting transactions based on the gross invoice value versus the net payment after discounts?
Well, posting based on gross invoice values means recording the full amount before any early discount are applied. So, whereas in posting the net basis will help you with the actual cash flow after discounts, the choice affects how expenses are recognized and impacts the financial reporting and analysis. For example, an invoice for $100,000 with a 2% early discount, the gross posting would be 100,000, where the net would be 98,000. What's nice about doing the gross first is that way you can see, what you're actually have spent, but the 2% discount is something that, you've earned by doing something, which is paying early or whatever the rules are of the engagement.
And should companies maintain separate GL expense heads for the discount versus the gross invoice amount?
Yes, best practices suggest maintaining separate GL accounts, one for the gross invoice expense and another for recording the discounts received. This separation enhances transparency, allows for detailed tracking of discount benefits, and supports more accurate financial analysis. For instance, you might have a cost of goods sold, which is the gross, and then a purchase discounts that reconciles the net payment. This is again for tracking purposes of making sure that the discounts are something that's a plus sign on your expense P&L.
And how do various companies typically handle GL postings for early payment discounts?
Companies adopt different approaches. Some post the full invoice value and then record the discount as a separate credit entry, while others directly post the net payment and separately track the discounts in a contra expense account. Large organizations often maintain detailed subledgers for tracking discounts to improve audit trails and financial analysis. The key is consistency and clarity in the financial reporting. Again, it's easier for the audits to look at the discounts taken from the gross amount of the invoice.
And what are the benefits of posting the net amount versus the gross invoice amount in the general ledger?
Posting net payments simplifies cash flow reporting and reflects the actual cash outflow, making it easier to analyze operational efficiencies. However, the posting of the gross amount along with a separate discount entry provides more transparency, allowing management to see both the overall expenses and the savings achieved by accepting the discounts. For example, a CFO can evaluate the supplier's performance by reviewing the discount accounts separately so that you know that vendor or supplier is actually helping you save money on your expenses by offering you the discount to pay early.
And in your experience, what is considered best practices for GL posting when early payment discounts are involved?
Best practices typically involves recording the gross invoice amount in one GL account and the discount received in a separate contra expense account. This method maintains the full cost context while clearly showing the savings, enabling more detailed financial analysis. It also supports accurate cost tracking and auditing, ensuring that the net expense reflects true cash outflow after discounts. This also allows management to track AP objectives to save money.
And how does Hyperbots Payments AI Copilot assist with GL postings related to early payment discounts?
Hyperbots Payments AI Copilot automates the extraction of the invoice data and the discount terms from the documents. It then matches these against the approved payment schedule and ensures that transactions are recorded accurately in the GL. The system posts the gross invoice amount and automatically creates the corresponding credit entry for the discount received, aligning the best practices. This automation reduces manual errors and streamlines financial reporting.
And how would you ensure consistency in GL postings for discounts across different departments and vendors?
We enforce a standardized chart of accounts and robust internal controls that mandate the use of designated GL codes for gross expenses and discount entries. Regular audits and reconciliation processes, along with an integrated ERP system, helps ensure that all the transactions are consistently posted according to the established policy. This consistency is crucial for accurate financial analysis and effective decision making. Again, the department objectives to reduce costs can be tracked.
What impact does proper GL posting have on overall financial reporting and decision making?
Proper GL posting provides a clear picture of both total expenditures and the benefits uh, gained by early payment discounts. This transparency enables more accurate cost management, better cash flow for forecasting, and enhances the vendor performance analysis. By understanding the true net cost of purchases, decision makers can optimize payment strategies and negotiate better terms with vendors, ultimately supporting the strategic financial planning. This process can avoid human coding and improve accuracy.
Thank you so much for joining us today, Michael. We had such an insightful decision, and I look forward to the next.